Hi everyone, I'm Lorenzo di Mattia, manager of Hedge Invest Build a Macro Fund. I wanted to discuss what we have done in August and the outlook for the rest of the year. August was a positive month. We made almost 2% net for the investor. Our view of a correction in risk assets materialized, and we were pretty quick in taking profits because of the massive move in yields, in bond yields, which make bonds basically uninvestable, and equity remains the only alternative basically. So any bearish view has to be measured against the level of rates. The economy is, however, really slowing down, so earnings will disappoint, and central banks are cutting rates, and QE is coming in Europe, but it won't be enough, in our opinion, until the Fed actually implements QE. Going back to our positions, we've also been long precious metals, which work very well. We closed them a touch prematurely during August, but we're happy because the swings in this asset class are very violent, so a correction will come and will offer a better entry point. We also shorted bonds tactically, as bond yields tend to bottom and bonds peak near QE launch. That happened in 2015 in Europe, and we believe it will happen again. So basically the bond buying happened before the fact, and then there is a pretty intense selling of bonds after the QE starts because of also expectations of pickup in economic activity. And let's go to the outlook. We are observing signs of slowdown across the board, except for the US consumer. So from Asia to Europe and manufacturing in the US, the signs of a likely recession in the second half of 2020 are pretty strong. The only thing that's holding up is the US consumer, and we believe that, as historically happens, it's the last to give up. So there is another important development besides the trade war is not going well, obviously. The Fed. So Trump has been telling the Fed what to do a bit too much, and he really humiliated Powell, calling him enemy of the country. So our context and our belief is that the Fed will not be as dovish as it could have been if Powell was on Trump's side. So we believe that Powell is no longer on Trump's side. And so although the Fed will obviously do his job with respect to stimulating the economy, we do expect to cut rates 25 basis points in September and December. Anything related to QE and price level targeting, which were the two big news for the next year or so, in our opinion, will be delayed, and unless things really fall apart. All considered, economy is weakening, and the most important central bank of the world will not be preemptively very dovish as it could have been. So all in, we believe there will be a correction of at least 10%, probably 15% in risk assets, especially in the S&P and NASDAQ. It could be even bigger, actually, in the cyclical indices. And we're ready to play that on the short side. After that, if the economy slows down enough and the correction is scary enough, we do expect QE by the Fed, and then there will be a big buying opportunity. Thank you very much.